But without further ado, let's get
No,
into
I
it.
mean, I would tell you crypto is the better space to be in. It's a lot more exciting. It never stops. So, uh,
I know. And to be honest, though, well, first, I want to say welcome to the podcast. We'll start this out because we're already getting
yeah,
into it. I do think that crypto is such a hot space and there is so much opportunity into it and beyond all the hype, because we're definitely going to be talking about the hype in crypto. And actually, while we're on this topic, to even start looking through all the X live spaces and just seeing like all, I don't want to say junk, but just like so many different live spaces involved in crypto. It's really hard to pinpoint who is credible, who is not, who should we be following, what are the certain topics that we should be following. I think that's worth noting. And that's also a big purpose and reason why I run the podcast, is because I think that there is, as hot as crypto is, as trending as it is, I think that there's a lot of misinformation and a lot of trendiness in the space, if you will. And we'd love, obviously, to hear your thoughts on that as well.
yeah. I'll give a quick background because I don't think
Yeah.
I've done that just yet. I'm Noah Bortnick. I live currently in Kansas City, so there's not a whole lot of people in crypto actually living in Kansas City. But believe it or not, I'm meeting a few even in various parts of Kansas that are up and coming and definitely putting their foot in the door in crypto and DeFi. But I have run a currently, I'm the head of DeFi and a founding partner over at Carpathian Crypto Management. We originally started back in 2020 as Black Box Digital. We run a few different funds out of there. We originally started with our flagship fund, which was a traditional liquid venture fund, which you're not seeing too many of those launch successfully anymore. That is still our flagship fund. It's currently going on. But over the past, I don't know, 2 to 3 years, my focus, as well as I would say the firm's overall focus, has started to shift into DeFi, tokenization, real world assets, and starting to push it a little bit more forward in an institutional sense to try to get different types of investors on chain.
That's beautiful. That's awesome. And you said you've been doing it since 2020, correct?
So I've been managing a fund since 2020. I got into crypto in the early parts of 2017. So I was still in college at that time. I had an opportunity to work closely with one of my good buddies who's actually an advisor to my firm, March Sang. I remember he came to me. He was always talking about crypto early on. He ended up starting a pretty big fund. And, that sort of started, he's the managing partner over at Byzantine Capital out of New York and Beijing. So he kind of got my interest started there. He's a big Ethereum maxi, or at least to some degree he used to be, but a very knowledgeable source who got me into this stuff, got me sort of into the fun game. A few years later, I started to manage a number of people's portfolios, high net worth individuals. It just kind of happened upon me. And at the time, after I graduated college at the University of Kansas, I was actually working in sports. So that was my undergraduate degree, was in sport management. I absolutely loved tennis. So I started to work at the U.S. Tennis Association. I was the director for junior competition for a couple of years. During that time period, I was getting my master's in business at Rockhurst University here in Kansas City. So I didn't venture far. I'm from Kansas City, still live here. But during that time period, I started to manage crypto, and I started to manage portfolios of some pretty high net worth individuals. And a couple of my high school friends actually came together, March also being one of them who went to high school with us. It kind of kept floating this idea. We've been in crypto for a while. We're managing a little bit of money. Why don't we start a fund and see if we can make a real go at it? And so we did do that. We started our very first flagship fund, and now it's morphed into I would say crypto native, tokenized funds, on-chain vaults, structured products. It could go on and on about that side of it.
Yeah, no, we want you to too. And keep in mind, people that could be listening are beginners in the market. So we'll want you to cover some topics and make sure that, like, if somebody is unfamiliar with certain things that you're talking about, you just clarify it for people so they can stay with the conversation that we're talking about. So, it's funny, like, people that get involved in crypto, like, I've heard really crazy stories of people getting involved in crypto. You seem to have gotten involved in a very, to say the least, nice way, because there's so many people that I have talked to that get involved in scams, or, they've lost 5 grand. I think you even had mentioned that in one of your outlines that we want you to talk about too. There's just many angles that we'll talk about throughout the show, but to circle back to what we were just talking about before we get into the business and everything that you do now, I just had mentioned that there's a lot of trendiness in the crypto space. There's a lot of noise in the crypto space, but also there is a lot of opportunity. And the whole point of Cryptic Humility is to talk about the scams and the fraud that happen and really get these issues addressed and also become a trustworthy source for people to truly learn this information. So I guess I would ask you, what do you have to say about the crypto space overall? Like, do you think that there are a lot of credible people? I mean, of course there are. Or do you think that we are running into a lot of just like imposter syndrome? What are your thoughts on that?
To be honest, I wouldn't say imposter syndrome. I would say there are certain groups of people that know exactly what they're doing. There are certain groups of people within crypto. There's the crypto native side. So that's going to be the very on-chain, and fund managers, I mean, to some degree, but you really see the builders as crypto natives, the people that are completely debanked. They're focused on building the blockchain and really using these applications in their everyday lives. And then you have another group of crypto right now. And I love CT. It's very funny. There are people that are putting unsubstantiated claims, not they are not doing research. They have multiple motives going on behind why they are shilling certain coins. And then you have this group of people the retail that's coming into crypto. They get in crypto Twitter. They see a lot of excitement. They see people with, a lot of followers. And so they inherently believe that they have certain levels of knowledge and access when it comes to meme coins, when it comes to rug pulls, etc. To be honest, there's really only one way around all of that. That's to do your own research. You do have to do your own research, and you really have to buy into this space to truly start to understand it. Everybody in crypto in general, I've been in it a while now. It's now taken up most of my adult life, I should say. So I've been around for the good and the bad, to be honest with you. I mean, I have made a ton of money, and I've lost a ton of money. At that point in time, it does come down to the people that get shaken out, that they never come back to this space. They made a lot of money and then they lost it, and they never really learned what the whole purpose of it was. Why are they doing it? They just, okay, XYZ token, Luna was a very painful learning lesson for me several years ago. And at that point in time, I had been in this space a while. So there's, you learn as you go along, but the only way you really start to truly understand this, I'm going to say digital economy, Web3, and understand these economies that are on chain, is by really doing your own research, getting on chain, going to these conferences. That the people that you want to talk to are not, in my opinion, again, generally speaking, are not the influencers on Twitter. Those are going to be the people that are out there building the protocols. They're talking to founders, they're talking to builders, they're talking to, institutional funds, etc.
So to recap on everything you said, I think you touched upon briefly like what happened with you with Luna, correct? So do you want to go into that like in more detail? You don't have to.
No, I talk about it to my investors, to be honest with you. The biggest mistake on Luna was decentralization. There was very little decentralization going on top of a large scale Ponzi scheme that was going on. And I got in pretty early to the project. And truthfully, the biggest issue there was I was probably a bit too, I'm 28, 29 now. So that would have been when I was 25, 26. And I made quite a bit of money. And I didn't understand what it would look like if you woke up all of a sudden and it was gone. You did not have your tried and true. I'm not a cash guy. I do not really believe in holding cash, but I do believe that you cannot go wrong holding your Bitcoin. You cannot go wrong holding your Ethereum. You cannot go wrong holding stablecoin yields. That's my cash play. Basically, it just goes without saying, if you make life-changing money, and some people throughout this cycle have made life-changing money and they've lost it. There was a guy a few weeks ago on Twitter. He had made 100 million off of meme coins, and then he levered up and lost 100 million, and he did that all within a span of a year. So My point being is, for your listeners that are in this space long enough, if you make that opportunity to make life-changing money, and it can happen with not, with relatively, I would say, respectable amounts of money, and it can happen very quickly. But you just have to manage your risk, learn those lessons, and don't try to play the pick and choose VC game and stay out of meme coins, to be honest with you.
Yeah, so I'm glad that you just said that last point, because to recap again on some things that you've said. First, I completely agree. I don't want to single myself out either, because I am trying to get on X Spaces to be talking about crypto and stuff, and there's so many people that do that. But truly, you're correct that there are so many people in the space that do preach and talk about meme coins. And we actually had a guest on a couple of weeks ago who was done a research paper and has done like a wealth of knowledge in meme coins specifically, and also the psychology behind them and why people get invested. And there is just a lot of them. Number one, it's an aspect of gambling, and I'm repeating back kind of what our last guest speaker had said. A lot of it is an aspect of gambling. So if you understand the space and that you could be potentially gambling, your whole mindset shifts in regards to how you're pursuing meme coins. But at the same time, it's like, is that really a worthwhile investment in the crypto space? Is that really going to bring you long-lasting wealth or some sort of return? So I don't know if you have any thoughts. I can see you're thinking.
I do have lots of thoughts, because there were earlier, about 18 months ago, there were a number of large hedge funds that were actively deploying into meme coins at very, $100 million check sizes. So they were absolutely going into these pools. The truth of the matter is, if you don't have, I don't believe in exposure there, but if you're going to have exposure, it should be very minimal. But it's hard to see those sort of returns and say to yourself, why do I not have some sort of exposure? That's on the way up. On the way down, if Bitcoin's going down 10%, meme coins are down 50%, 60%. And so you truthfully just don't need to play that game. I'd rather play the game of, okay, Bitcoin, I'm not a big XRP fan, but Bitcoin or XRP or Ethereum, some of these large cap tokens are up 35%, month over month over month. Well, you can make that in any other market is outstanding or unheard of returns. And so you need to take a step back and start to realize, number one, to get those large meme coin like returns, it is a gamble. But number two, if you really want to go after and try to get those, 100x's, 50x's, etc., why not put your money in something that you can live behind if you lose it, like a small cap fundamental project where you've done the research, you've talked to the founders, you've gone to the conferences, and you start to understand those teams, because those returns, I've never made money in a meme coin, except I like to gamble like everybody in crypto. That's inherently true. I love baccarat. We crypto people love to gamble, so there's no mistake about it. But when you're gambling with real money, whatever that looks like, don't put your money in meme coins. Don't put your money in meme coins.
I agree. And I think I like that you said, going to the conferences. And I know that you had mentioned like DeFi. There's like a certain DeFi conference. It's like hackathon, DeFi hackathon. So, or something like that. So definitely like go to conferences and meet real people that are trustworthy in the space, because it's so easy to listen to people online and then not have any clear direction. That's actually what happened to me, and how I got involved in the space is I got involved in this huge pyramid scheme. It was actually an FX day trading, but they were trying to like pitch us AI software that could make passive trades for you. And it was just all word to mouth, and I never connected with somebody that was actually a person that could help me through the process. And that's how you get lost in the space. And I'm going to be completely honest with you. The number one thing that drove me is that I could be making money, like without actually technically doing anything. So there's a lot of get rich quick schemes that I think entice a lot of people. And like the word of the year is sexy because all my guest speakers have been talking about that, like the crypto space is sexy. It's a sexy new way to invest. That's why everybody wants to get involved with it, is because this, like our last guest was talking about how everybody wants to have like a Lambo or like a dream, you know, they want the fast life, the dream, what they're being sold on social media. And sometimes they connect crypto to that. And unfortunately, it's not true. But before you say anything, I also want us to circle back eventually to why you don't like XRP, because I'm very curious to hear what your thoughts are on that.
Gosh. So Brad Garlinghouse went to KU, and I was part of the Blockchain Institute when I was there. So he's the CEO of XRP. Truthfully, I don't see the fundamental value in it. I think it's overly centralized. There is not a lot of dApps built on there. I mean, it's getting better, but everything about XRP is built like a security. So I know they won their SEC lawsuit, but everything
Right.
about it is built in a very centralized way. So I think once you start to look at it, there is very little that I don't even know if there's an XRP foundation, to be honest with you. I just know, so if there's no DAO built around it, there's no any form of decentralization. They finally minted their very first stable coin. It's getting some adoption, but again, I don't see the fundamental value in why the price is going up the way it is. To me, what that says is there's a number of large holders that continue to hold. Every single cycle, XRP holders become a bit of we can't lose, and they keep holding and they keep holding and they keep holding, and they'll write it down. Now, I don't think that's true for everybody. You know, I've heard on a very opposite pitch that it's a great investment banking play. They are getting, you know, some institutional adoption, but for me, it's just not decentralized.
Okay, and let me ask you, for the audience purposes, if we, you know, the average person who has no knowledge in crypto is talking to both of us right now and is asking, you know, how do I look into these red flags? Like, how do I notice these red flags? What resources would you suggest? For example, I know you just mentioned, like, if they don't have a foundation, like Ethereum Foundation, for example. So like that would be one thing that maybe would be a red flag. Do you have anything else that people should really look into to figure these things out? Because we're talking to beginners.
Yeah, that's a excellent question. I mean, I think in general, it just starts from a place of researching it. So if you have not read the white paper of that individual token, that is the very, very first place I start on every project. Read the white paper, understand it, connect in the Telegrams, the Discords. Those team members are there. The founders or their staff are there to answer questions. Ask those questions in there. Generally speaking, we have a saying in crypto that's don't trust, verify. Verify as much as you can on chain. So start to become familiar with looking over Etherscan. Start to become familiar with looking over Basescan in any of the block explorers. So just that I know sounds like a lot, but if you cannot read and really start to decipher just basic bits of data on the blockchain, I might take a step back and just say, put your money in Bitcoin and Ethereum and call it a day. But outside of the white paper, your best bets are going to be getting in those Telegrams and Discords. You can tell right away if people are avoiding, you know, your questions, if it's a really disorganized project. I don't think everybody's going to want to get on a call with some of the team members, but if you can and you're motivated to, before I was really in this space, that is how I, you know, started to network, is just reaching out to them. And I would say 50% of the time they did get back to you and are willing to jump on a call. Now, some people may not want to do that. I would look at other resources. Research CoinMarketCap's a great place to start for more of the retail. If you're looking to go a little bit more in depth, something like a Masari, which is it's like Bloomberg Terminal, where they publish everything from the DAO reports to the tokenomics to the vesting periods of various projects. And that's actually on Coinbase One. You get for your investors who subscribe to Coinbase One, I think it's like $50 a month or something like that. You get a free Masari Pro membership, and use that stuff, especially if you want to be in this space. the time period it takes to become really knowledgeable compared to everybody else, it's like 3 months of deep research. And then if you keep doing it, within a year, you're going to be so much more connected. You're going to have met people, whether it's you've never met them in real life, which is a very frequent thing in crypto. But again, it's using those free resources that are around you. Then if you're willing to pay for something like a Masari, which I highly suggest, it's very easy to understand. It gives you everything you need to start to dive deeper into the data, and becoming familiar with what the difference between Ethereum and Base and Bitcoin and a Bitcoin layer 2. Become familiar with those terms. It will help quite a bit.
That's perfect. And honestly, that's what we're looking for. We're looking for those resources, and for people who have done the work and done the research to kind of give other people shortcuts. And I 100% agree. You should be starting to look into these differences. And honestly, like, even if you don't get to the white papers, which you should, we just had somebody on the podcast that said that the Bitcoin white paper is like 7 pages long with graphs included and whatnot. So it's like, it is incredibly easy to get involved. And we try to stress that it's not like reading a college essay or something. But even when I was in college, I did a directed study in crypto, and that's just how I started. I just started researching, and just simple knowledge of understanding how blockchains work, how a block is formed, like really diving into this fundament. And honestly, I'll share my directed study with anybody who's ever looking for it too, because it just sets all the foundational information. But it's good to hear from you, because obviously I'm like, we're going to switch gears and talk about the business more, and maybe more suggestions of what you would suggest to clients and stuff. Go ahead.
I would suggest one other thing, because it was kind of new. To be honest with you guys, if you're not using AI to dive through some of the crypto jargon and really deepen your understanding, that was a tool that wasn't there for the longest time. We use it now to decipher data, at different levels, of course. But if you're not using AI to answer some of your questions that you can get, right away, at least on the basic questions, and it'll take it deeper and deeper and deeper, and then all of a sudden you're completely down the crypto rabbit hole. Do that. I mean, find a token, whatever the token is, start to research using that. Now, I would caution you, I'd always double check everything if it's transaction data or something like that. But in terms of research and understanding, that resource is phenomenal in crypto. And I think just about everybody I know who works in this space, whether it be fund management or building in some capacity, devs, I mean, we are constantly using AI to deepen our knowledge of blockchain.
Good. That's a really good resource. Honestly, that's doing research with AI is not new to me, but to know that you guys kind of use it on the regular is really interesting, because there's a lot of negatives to AI too, and we can go down that rabbit hole, but we really don't have time. We don't have time today to do it. But let's switch gears. Let's talk about some of your clients, and maybe what would you suggest to somebody who's coming to you that's looking to invest, and maybe you can talk about it in sections. Maybe somebody who doesn't have a lot of money compared to a client that does. What would be your recommendations? So
typically we work, it's changing a little bit, but typically we work with credit investors. So they have to have, make $250,000 a year in cash, or have a $5 million net worth, et cetera. And that's the way private placements in the US have always been. So when that happens, we take them through a process. We work with Formidian fund administrators, who are very compliant, third-party fund administrator. We work with institutional grade custody, and we'll take them through the process of what our thesis is, what we're seeing. Generally speaking, we're not creating any individual one portfolio for a person. So we're not wealth advisors. We're fund managers. So we have a pooled vehicle of capital, and we invest it based on our research and kind of how we see fit. But with that being said, we make a number of what are called separately managed accounts. Usually those are going to come in on the higher end, usually $300,000 to $1 million type of account, and we'll manage those strategies based on what they want to see. And sometimes we do get individuals that want to see that type of account, and so we'll start to understand what their mandate is, and we'll either have a strategy that we've been running for a while with a track record, or we'll bespoke them a product. But with DeFi in general, it has given retail, and retail is largely unaware of DeFi up to this point, but it has given them the opportunity to have managed products by extremely, billion-dollar asset managers, on-chain asset managers, where they can have curated exposure. And so whether that comes in the form of a tokenized index fund or a tokenized strategy fund, retail investors can access professional grade investment products. And that's actually what we're focusing on right now. We're launching a number of different tokenized vaults and funds, depending on where you live in the jurisdiction. But if you're not familiar with DeFi, I would tell you to go look at tokenized index funds. You can access top 25 coins. And truthfully, for a vast majority of people, that's all the risk you really need is top 25 coins. And so you can access those products right now simply by having a self-custody wallet, moving your Ethereum or your Solana, et cetera, into a self-custody wallet, getting exposure that way, and just a one-click dApp. And I'm happy to share some of the different protocols as well as some of the different information that we have on our products. But generally speaking, you want to be with a manager if you can be. So DeFi is the only way you can really do it unless you're an accredited investor in crypto right now.
100%, especially with that amount of capital. And I feel like obviously crypto can be so high risk. A majority of the time it is high risk. So definitely, and we always preach on the show that we're not, I'm not a financial advisor. So like, don't necessarily quote me on anything, but that's why we bring credible people on to talk about their experiences and share resources. We definitely want any and all resources that you have, even like links to education, specifically in your career, which would be another question is that, and you kind of already have covered it through other topics, but if somebody was interested in going down your path, what would be your suggestion and maybe some mistakes that you've made? And actually what I also wanted to ask you, I don't know if you can share because I know like about client privacy, but are there any like stories that you've had with like specific clients too who maybe have wanted to risk all their money or maybe did and then needed your help? Or is there any like stories that you have that you could just share with us too?
Let me think about that question for just 1 second.
Okay.
But for people that want to come into this space, if they're thinking about fund management and particularly on-chain fund management, I'd be happy to chat with just about any of them one-on-one. There's a lot of different jurisdictions. Anybody that talks to me in crypto and funds, they sort of know I am an idiot savant when it comes to setting up funds and structuring funds. I don't know why, I just am. So I've actually helped a number of emerging fund managers launch funds from A to B. I think I became overly interested in it because the very first fund that we set up, I think it cost us like $75,000 and so in legal fees, which is quite a bit of money for a couple of kids who just got out of college, I should say.
Oh yeah.
So I really honed down on fund structuring, and then after that, there's a new trend called vault legal infrastructure. But basically, it's where you're tokenizing the shares of funds on chain, and it's sort of automating the process of subscriptions. Which that I won't go into that spiel, but I think for anybody that wants to get into this stuff, I would suggest you start to build up a track record. You're truthfully not going to want to start a fund if you're not taking a minimum of like, say, a $50,000 subscription, and those have to come from a certain group of people, the accredited and qualified investors. So work on your network a little bit, and so as well as your strategies. So right now, investors want to see a very specific strategy, and larger institutional family offices, even some of the crypto native DAOs, they're looking for more stable yield. I would say there's a little bit of interest if you're wanting to go into the buy, sell, liquid venture, but those are what we call generalist funds. And I think for emerging fund managers, that is largely going away. That period in time is just not there like it was, 5-6 years ago. So I would suggest, you start to build up your track record, you start to work on your network, and then figure out how badly you're willing to raise money, because it's hard to raise money. It's hard to get people to give you money, especially if you're a first-time fund manager. It's super hard. And then show your expertise. So it's putting out the research track record. Then once you have the money, you better know how to perform, because you truthfully get one opportunity, or else nobody will trust you again.
It's very true. There's a lot of high pressure in your job. And did you feel when you first started out a lot of high pressure? And also, did you guys have a tough go in regards to people initially trusting you, or how was that process?
Oh, I mean, it's still hard. It's still hard. I mean, look, in the grand scheme of things, I will tell you, TradFi funds, which is our primary target right now, as well as I'll include family offices in there. These are very, very large institutional managers, much, much larger than us. Some of them, we met with a $50 billion multifamily office manager. Well, I would say that their knowledge in this space wasn't as great as ours, but they're very used to a specific way things are done. And so if you're not willing to learn that process of this is the exact data they're looking for, how the meetings are supposed to go, how you're supposed to present yourself. If you don't have that track record, it's only recently gotten easier for us to get those meetings, to get those type of opportunities to raise larger checks, but after 6 years. So to be honest with you, we're still in the very, very early stages. I mean, again, we're 28, 29 years old. So look, I mean, yeah, it's going to be really hard is all I can say to raise money, but it can be done. And I've helped a couple of fund managers do it. I'm not anything special. And I don't think anybody that I know that's really, really made it would say that they started with every little bit of knowledge. It's just been a constant learning process of, okay, this is what fund management looks like. This is what crypto native, how crypto natives talk. It's how we vet projects. And it's just been all culminating that together over a number of different years. So I would say if you're interested, take the stab, get started, but understand it's hard.
Absolutely. And number two is that if anybody is listening and interested, that they have a resource now and somebody that they can reach out to and talk to. I think it's incredibly impressive that you guys have raised that amount of money to start. And I'm only 3 years younger than you, so I can't imagine, I'm sure it took a lot of sacrifice for you guys to get to this, even just to this point. And you say that you're nothing special and you're just starting, but truly, like, what you're doing is amazing and it's needed in the space. There is opportunity here for crypto, but we need more fundamental people that are a little more reasonable in crypto, if you will, and truly can educate. And it seems as though you have a background like even beyond crypto too. So, but I think it's amazing how you ended up here, and it's probably easier because you said you're a co-partner, correct? So you do have like one of your friends that helped you get this going too.
So there were originally there were 3 of us, as well as a series of we had Byzantine Capital as an advisor, which, as I previously mentioned, that was a close connect. And then we had a family office who was an advisor to us as well. So again, I got a little bit lucky, at least on one side of it, because I grew up with a guy who was before me with it in crypto and fund management. But to be honest with you, it's that network is everything. So as well, I would say make sure as you're doing this, you find partners, you find strategies that align with what you're interested in. If you're running a strategy that you're not interested in, and all of a sudden you have people's money, that's a little bit of an issue.
Yeah, a big issue, 100%. That was a really insightful. I think overall in this podcast episode, you have given a lot of good resources in regards to research, in regards to where people should start, terminology that they should be familiar with. Is there any other terminology that you think people should be familiar with? You've covered a lot. So anything like even in your career that you think people should start knowing before they dive?
All right. I got my last piece of advice, just okay. Generally speaking. And I've kind of said this all the way through, whether it's in crypto or, whether you're just a retail investor turned crypto native or you're a fund manager, or now we're seeing wealth managers and RIA space and crypto. I would say the most important thing to gain legitimacy in this space is one, to be transparent, but also be completely honest with your wins and losses in the space. And I don't just mean in terms of monetary value, but I mean this space is it's the biggest anomaly I think we're ever going to see in any industry ever. You never ever know who you're talking to, but it's very easy to tell somebody who's not being how should I say this, genuine about certain wins and losses, about what they're, being overly, if they're hyping a token or they're hyping a project or they're hyping themselves. If you remain humble, this space wants to help you, whether it's a founder of a project or I'm always happy to talk to anybody about crypto or funds or, just business in general, politics as well. I love politics. So to be honest, if you're humble and you really want to learn and you don't think after, 3 months, 6 months, a year, oh, I've got it all figured out. There are people that have never sold since 2009, which is unbelievable. So with that being said, just come into this space with a completely open mind, but be willing to admit when you don't know something, because those are the type of people that we want to introduce to the next person and the next person. It's a really, really small world, and you meet people all over the world. And so just understand that the space can be for you at, like, even if you're just starting.
Yeah, and to your point, just be careful about who you're following. Be careful about who you're trusting. And honestly, that could be in any space, but specifically in crypto, because crypto is still relatively new. Yes, it's been around since 2008, but like with the hype and the buzz right now, especially in meme coins and all the things that we've talked about, it's really important to be careful about who you're placing trust in, especially with your money.
Absolutely. You don't want to trust the people behind the keyboard. I actually met somebody who came up and visited me in Kansas City. We were working on a potential business deal. We had not met in real life. And there's always that bit of, mistrust until you meet somebody in real life. Well, we had met, we were able to hash through certain details, establish some sort of a personal relationship. Trust that person who's willing to do that, or the people that are willing to go to those conferences. Because again, those are the people that are invested for, the career and looking to build long-term relationships. So the influencers, there's a lot of trolls in crypto Twitter. Don't necessarily believe everybody who's got the biggest following on Twitter. I've been around, this is now my third full cycle of this. And so there were people I knew back in 2017 that I don't know where they are anymore. So a lot of them got, they're no longer on Twitter. So really believe those people, even if they don't have a lot of followers at those conferences or in-person meetups. Go to the crypto meetups and really start to establish that network.
Yeah, and honestly, like sometimes I feel as though you can trust people who don't have the biggest following even more. You find more genuine people. Not to say that people with big followings aren't genuine and don't have good information too, but it's easy to follow the crowd, and it's easy, in crypto, basically just don't get lost in the hype. Do your own research, follow through all of Noah's suggestions. And I'm actually going to people have already seen them by now because they'll watch on the podcast, but I'll put visuals up. So every topic you talked about, we'll put definitions, and we'll make sure that people deeply understand what you're talking about. And of course, any questions, I'll have all of Noah's info below, and if any resources that he wants to include, he can include. But you would definitely be in good hands talking to Noah in regards to pursuing a similar career choice, or even just finding clarity in the crypto space if there's something specific that you need help with. I want to appreciate you and tell you thank you so much for coming on. I don't know if you have a story that you want to share. You don't have to, but it would be good to share.
I will give one story just about this entire trust. Don't just trust everybody, but we all know FTX and Sam Bankman. So our first fund, this was probably the most stressful period I've had in 6 years of doing this, is when FTX collapsed. We had just opened up an account with FTX. We started to hear, just rumblings of, FTX could collapse. So to the point of Sam Bankman-Fried was on, Capitol Hill like 2 weeks before that, testifying on behalf of, something. Well, he would be a very easy person for just about most of the world to allow him to commit the biggest financial crime. But I would say, if you're going to try to avoid that, really start to hold your own keys, way of thinking. We had moved everything into self-custody via, I think at the time it was Fireblocks. Yeah. So move your crypto assets, learn about self-custody, so you can avoid those scammers. That's the best way to do it.
That's really good advice. We actually covered that scandal on the podcast many months ago. And I was going to mention and talk about that it's really important to look into the business models of these entities as well before you go and invest in their native token. And again, I'm not a financial advisor, but I think it's really important to see the backing of business models and how some of these crypto companies are functioning before you just go and invest all, your money into a native token and you're supporting a company that you really don't know how they're reaching success without your funding and your support. So I don't know if you have a comment towards that.
I would say for your US listeners, stick to the US exchanges. So all those are qualified custodians, which FTX was not because it was based over in the Bahamas.
Right.
The core qualified custodians, Gemini, Coinbase, Kraken, those are very solid places to buy. They're likely not going to collapse or anything along those lines. They're very solid. And I like a lot of people that work there, and I believe that they're extremely transparent because they have a ton of oversight. But still, move your assets into a ledger or move it into anything self-custody. That's going to be my one thing there. Don't trust that it's going to be okay. Crypto gives us the ability to be our own bank, so be your own bank, hold your own assets, and learn about keeping of those seed phrases and how we can protect ourselves. We did not lose any money in the FTX scandal. So,
oh, good.
I feel like I left that out. We did not lose any money. No, we did not.
That's good.
So,
Well, you guys probably were getting the warning signs ahead of time and could potentially be proactive.
it hit most of us out of the blue. I think maybe we saw some warning signs, or maybe self-custody is just the way to go.
Well, 100%. I trust your input in that. I don't know. I thought I had heard that there was like speculation that the company was like going bankrupt or something. I could be mixing this up with the Celsius scandal though, because we did cover Celsius, and so I could be like mixing these two up. But
no, you're not. Those are all actually interrelated, so they're all lending to each other, and that was a mess during that time period. But I will say that the risk management practices that we saw, they have gotten better and better and better. Every single cycle, people say it's going to be different, that we won't see some ginormous crash. I'm going to tell you guys, there will be a pullback at some point. I do think we go higher. There will be a pullback because that's market cycles, and be okay with that.
I agree. I want to say thank you so much, Noah, for coming onto the podcast and sharing your insight. Definitely we'll have links and resources. Like I said, if anybody's looking to contact you, it's down below in the podcast description. And hopefully we'll be in touch to be able to talk about like on an X space at some point. And now we kind of know how to co-host that. But anyways, thank you guys. Thank you, Noah. Thank you so much for coming on. And we will be in touch on next Monday. Thank you.